Hi guys, hi everyone. Can you guys hear me? I share my screen. Hi guys, good morning, good afternoon, good evening, wherever you are. Welcome to IronFX webinars. Can you guys hear me clearly? Yes or no, guys? Hi, how was the webinars last Monday? Okay. Okay, you guys give me a thumbs up so you guys can hear me clearly. Okay. Shall we just wait for 1 more minute for everyone to tune in our Saturday session? How was your trade last Fridays? Any one of you guys buy gold or short? Like USD JPY or USD CAD, anyone? Because of Powell, he said that he's going to cut the rate, right, in the September. That's why dollar is falling and gold is rising. You buy gold. Wow. Okay, you buy from which price? I did not buy gold last Friday, but I short USD CAD. Okay, so I make quite a good profit for the currency pair, not gold. But after the news release, okay, after he spoke, I short gold at the top and then I closed just before the market closed on last Friday. Yeah, I made quite a good profits last Friday. But the one that give me the profit a lot, that is USD CAD. Okay, later I will show you the entry as well. Okay, wow, that's quite a lot of you guys. Okay, anyone the first time joining the webinars? How was the session last Monday? I think last Monday covered by, who is that? Is it my colleague Bun Hong? Is it the guys, right? I'm not sure. I forgot. Okay. Anyone the first time joining the webinars? You guys can let me know as well. Okay, so today gonna be part 2 for okay, anyone will say okay. So shall we just start? Okay, our webinar. So again, guys, good morning, good afternoon, good evening, wherever you are. Welcome to IronFX webinars. So the webinar series today, we're going to talk about advanced SMC concept and practical application. Okay, and risk warning first. Okay, our product are traded on a margin and carry a high level of risk, and it's not suitable to lose all your capital. This product may not suitable for everyone, and you should ensure that you understand the risk involved. And disclaimer. Okay. Oof. What does disclaimer say? The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. Okay. And about myself, my name is Peggy. I'm an investment analyst and a prop trader or proprietary trader. I think some of you guys have heard about what is a prop firm. So basically, you pay for the challenge, okay, and then you need to pass or the challenge, like we have a step 1, step 2, you need to follow the rules and you need to make a profit like step 1 or stage 1, 10% or 8% depending on prop firm, and step 2, that would be 5%. If you pass all the challenge, right, they will give you the capital to manage or the fund, you get funding from them. After maybe 2 weeks or 1 month, okay, if you make a profit, they're gonna give you the profit split like 80-20 or 75-25, depending on the prop firm. And then they will give you the refund as well. Okay, but it's not easy to pass because even though you purchase for 100K account, okay, but you only can lose 10%, that is maximum daily drawdown, which is 10K. and the max daily drawdown, which is per day, you need to lose 5K. So basically, even though you buy 500 100K account, you need trade on 10K account only. The reason they just give you the max loss 10%, but you have buying power. Okay, so you can go for bigger lot size. Okay, that's different from if you trade on your 10K account and you trade on the prop firm account 100K, even though they give you only 10K to trade or 10K to lose. You can just Google it if you are interested. Okay, I have passed multiple prop firm. Okay, I also drop a lot of them. I also fail many times as well. Okay, so the agenda for today, we're going to recap the foundation of SMC market structure is institutional order flow and liquidity, order block, fair value gap, and market imbalances, supply and demand zone. So how was the last session, guys? How was the last session? Anybody of you guys attend the webinars? Past one. Nobody? Anybody? Anybody attend the webinars? Oh, nobody want to talk. Okay, so basically SMC, okay, just the foundation is that we want to trade the same direction of the big boy in the market. So basically SMC, okay, we try to kind of like find the footprint and then we want to follow them, okay, the same direction. So basically, okay, so give me a second. I think the kid is home. I need to lock my door. Okay. Okay, I'm back because they will open the door. Okay, sorry, you're disabled the chat zone. I'm not there. I think you can send me a question. I don't know why they're not allow you guys to chat, but here I say like everyone who can chat with me. I think this one is a setting by the IronFX people. Okay, but you can send me a question. Okay, let me say hello. Can you guys see my chat there? I say hello to everyone in the chat box. Can you see that? Reply, no. You can see, but you can't reply. Because you can to everyone, and then I put like everyone can. I don't know why, but you can just send Q&A section. Okay, so shall we just continue? So market structures. Okay, you guys should already know market structures, right? What is the market structure? Okay, so for the SMC market structure is their backbone. Okay, because they are used like if price on uptrend. Okay, they will use the higher high. Okay, higher high, higher low, higher high, higher low for the uptrend. Okay, for the downtrend or bearish, they're gonna look like this: lower low, lower high, lower low, lower high, and so on, right? And then they say that break of structure is a confirmed trend correlation, meaning that if price make the higher high, higher high, higher low, and if they break this high, okay, this is gonna be our break of structures. Okay, break of structure is here. Okay, and if change of character is for trend reversal, meaning that price make a lower low, lower high, meaning that this one, okay, they break below this previous low. This one gonna be your change of character. So you need to wait for price to pull back somewhere around here and then you sell somewhere around this zone. Okay, it's the same for the downtrend, right? This is your okay. If you see my handwriting here, it's not nice. I have to tell you guys that I'm the left-handed, okay? And I'm using my mouse on my right hand. So I'm using the I'm using the mouse on my right hand. Then I need to write on my right. Yeah. Which is my handwriting may not be very nice because I'm a left-handed person. Okay, I try to make it nicer for you guys. Okay, this is a break of structures. Okay. This is a break of structures. Any one of you guys is a left-handed like me? Okay, this is a break of structures. Okay. Okay, break of structures here. Okay. Okay, you say you attend the webinar. Okay, how was the webinar last Monday? Can you give a feedback? And then, right, this is gonna be chain of character. So price need to make a break above this previous high, right? Previous high is a chain of character. Chain of character. So you need to wait for price to pull back somewhere around this level. That's gonna be like 50% to 78.6% Fibonacci level, and then we're gonna buy from this level. So you're gonna buy here, and then you're gonna sell here. Okay. Okay, you said that it's very educating. Okay, that good to know. Okay, I will give him a feedback. Okay. The guy's right. His name is Woon Hong, is it? Yeah, because I asked him to cover my webinar. Okay, so this is the meaning of the breakup structures. Okay, and then continuation, chain of character. Okay, so reading market structure and price precise trend analysis and health time entry, consistent and institutional flows. So you need to know all this. Okay, and now institutional order flow and liquidity. I think liquidity you guys should already know that we have buy side liquidity and sell side liquidity. Okay. The institutional order flow focuses on the locating liquidity pools, areas where many stop losses or pending order rest, often at the previous high and previous lows. Okay. Institutional gravitate to those pools, triggering stop losses in order to accumulate or distribute position at the favorable prices or liquidity sweeps. Okay. Key indicator includes volume profile, liquidity voice, and a pattern of price manipulation at high volume zones. So maybe let me move. No, let me show you guys the chart here. No. Oh, hang on. I'm gonna open the chart. Okay. Just hang on. I need to find my layout. Because I don't know what my colleague he covered last last Monday. Okay. Okay. Let's just talking about here. Okay. Market structure, we already know that, right? Higher high, higher low. Price break this low, pull back, and then you're gonna sell. So you're gonna sell here, right? You're gonna sell here for the price on the bullish. Okay, I'm gonna do a quick one. This is your break up structure. Okay. Yeah. So yeah. Okay, and this is our chain of character and so on. Okay. Yeah, so if we try to pull back somewhere where they're going to sell, they seem like the bearish. bearish, lower low, lower high, make a new high, okay, wait for price to pull back, and then you buy up. So you're gonna buy here, okay, and channel character is here, right? Because they break above this high and make a new high, correct? Because if price want to continue to go lower, still valid, they should then break above this, continue to go lower, low, low, high, and go on. Okay. And why the break of structure for the bearish one is below here. Okay, it's below here. And it's below here. Okay. Now, indicator. Okay, you want to use indicator on SMC. You can use, but I'm not using, but you can use, try the, maybe here. Or maybe here, let me see. You want to try, okay. But you can see that, right? You can see that here. Oh, let me see. Then what is this? I don't know what is this one, but I will remove. Okay. You have to look at market structure. I don't know why there's so many here, but what you can see here, right? Okay. From here, they will say that there's a chain of character. Okay. And then break of structure, break of structure, break of structure. The chain of character. I think this one you might be confused, so I will just show you. Or ICT, two keys. If you want, actually they're quite similar. If you want to look for market structure, okay. There will be liquidity. Why is the word liquidity? Liquidity is here, okay. I don't know why it not come up, but don't worry. I don't know why. Maybe in the lower time frame. Okay, these are these cooling zones. Let's say this ICT. Anyway, don't mix up. Okay, so it's the same. There's a liquidity. So we have liquidity. Wait, our liquidity is here. It's above this high. So basically, this is the zone, right? So this is zone. Sometimes I will go to the higher time frame. Sometimes here, you might get a stop out based on this week. Based on this week, for example. Okay. For example, you were to buy. Okay, you were to buy at this level, right? This is your sell side liquidity. You want to buy here, right? This is your the low. You might get like, stop out because of this week and then price is rising. So how are you going to prevent from how to prevent from getting like stop hunt? Okay, we don't know, right? We don't know, but usually what I do, I just use my strategy is that I will use Fibonacci extension, meaning that whenever it price break below this low, okay, the next zone that I'm going looking for is gonna be this one, right? Gonna be this one. This is order block. Okay, we have the bullish order block here, or bullish OB here, and either either to buy here, I will put my stop loss below 127.20 or 161.8, or I go to the lower time frame. You're gonna buy here, right? You will get stop out here, right? I will use the lower time frame extension, meaning that I will put my stop loss below 3319, and you can see I break below the previous low here and tap in the extension. Okay, you might have another buy. My stop loss put below 161.8 on the M15. Okay, this is the only way for to prevent me from getting like stop out. Okay, so I will use Fibonacci extension to place my stop loss if price break below the swing low support level, which is here. Okay, I need to see that. After that, on the lower time frame, right, price is rising all the way just before the news. Okay, let's stop hand and go to higher time frame. So we could say that this is the buy side liquidity. Okay, this one you could say that this is your buy side liquidity, and this one you could say your sell side liquidity, which is here. Oof. Here. Okay, and this is your sell side liquidity as well. From this, usually it's the wick, right? Or you put here, let's say you are the wick. This your sell side liquidity. Why we call that? Just as simple as that, right? So here, let's say you sell at the swing high resistance level. Okay, above this swing high, they're gonna have stop loss, right? They're gonna have like stop loss here, stop loss for the sell entry, right? Because you're gonna sell. Then above the resistance level here, it's gonna have the buy stop. They're gonna have the buy stop. But they're gonna have the buy stop, right? Correct? They're gonna have a buy stop there. Okay? They're gonna have the buy stop here. Buy stop order raising above this sell entry. So whenever your sell entry, let's say your sell entry here, your stop loss slightly put above, price is kind of like rejected a little bit and then rising, hit your stop loss and trigger your buy stop, and after that it revert. And then it also hit your buy stop loss. Because we buy here, right? You're gonna buy here, you put the stop loss below your buy stop entry, trigger your buy stop, and then after that revert and hit your stop loss. It's the same concept of buy side liquidity. Okay, what is about buy side liquidity? Either you're gonna put here your buy side liquidity. Same, right? Okay, you buy here, you put the stop loss below here, correct? And below your buy stop, buy entry, you're gonna have your sell stop entry here. So price falling hit your stop loss for the buy entry and trigger your sell stop, and after that it revert and hits your buy stop loss, sales buy sell stop loss. Okay, it's the same concept. Okay, any question? I can't see you guys here. Okay. Okay, I'm continue. Okay, so here, so these are buy side and sell side liquidity. You guys can see my screen, by the way. Okay, let me share one more time just to make sure. Okay, you guys can see. Perfect. Okay. Now I'm going to talk about the order block. So the order block, what does order block mean? Is specified price zone where substantial buy or selling order have been historically positioned by major market player like institutional trader. So basically, bearish or bullish OB or order block, it just happened at the support and resistance level, and then you see the bullish engulfing candle. So when you mark out the zone like that, okay, for the first time, price go in the box, you're gonna buy. If price come in again, we not buy. Okay, we're gonna buy when the box is fresh. Okay, how do we get confirmed to entry? Okay, I will show you later. Okay, let me cover this. Here, right? And XAUSD, you will see that this is your order block. This is your bullish OB. Okay, you can see that this is your support level and imbalances here. So whenever price go to the zone, we're gonna buy at this level. Okay, at like 33.28, something like that. Okay, and another zones here. In H1 time frame, okay, you will see that there is the order block here. This is the bearish OB is here. So when price come in again, we may not sell, but you might say that, okay, this is your resistance level. Right, and this is your OB. Meaning, let's say if you were to sell here, price rising somewhere around there, and then you should know that this is your bearish OB, right? Because it had the resistance level and price is falling, go back to the OB or order block, and then you buy. Another one is here. We consider is your bullish OB. Okay, price come to the box and then rising. Okay, this is not right. Why this is not the OB? Why? Because it's not bearish engulfing. It's not engulf candle, right? So the candle have to longer than this bullish candle. That's why if you were to say that, you can see that you will get a stop out. Okay, this is not the OB or the block. Okay. And the breaker box. So basically, the breaker box, keep it short, is just that fail OB. Okay, so meaning that the breaker box that area on the price chart where the market had made significant move to break through previous support or resistance level, but retraces back in this level, which is I have an example of gold right here. Go to H4 time frame. I remove everything. Okay, and here. Okay, so I would identify this is my bearish OB, right? This is my bearish of the block, correct? So we will wait for price to pull and then you're gonna sell, correct? This is a bearish OB. Look what happened. I would say this is a neck resistance level. Boom. Price break where? Price break the OB, right? Price break. So from this level, from this OB, it become your, if price come back again, this is gonna your breaker box. Okay, so this is your breaker box. Okay, price supposed to revert from our bearish at the block, but it close above and pull back. There's your breaker box, and after that is rising. Okay, there is rising. And another example, very good example, is here. Right, this would identify at our resistance level. I would say my resistance level, but above that resistance, I have the OB here. So I would identify this my bearish OB or bearish of the block. Okay, so price have to rise and falling, and I'm like somewhat might be got stop out here because this is a resistance and we also have another block. Okay, watch out. Okay, whenever price, okay, break above, from your bearish OB here, it's gonna become your breaker box, meaning that if price come to the box here, we're gonna buy. Okay, we're gonna buy here. You see that? For this level, let's say our price will make a high. Okay, let me see. Okay, put here. From this swing high to this swing low, you will see that there is 61.8% Fibonacci retracement here. Let me if they make this high. Okay, so that's gonna high here. Our 61.8% is right there. Okay, now if price come to the box to break a box, we're gonna buy from this level. Okay, and this one used to be our resistance level, and then you can see that that is support level right here, and we have 61.8% Fibonacci retracement. So if price falling here, we're gonna buy, right? You will see that price falling, and you can see the rejection in the box, right? You will see that anybody buy from here. You can see that this very beautiful, and price break above this resistance, okay, and pull back, and will continue to maybe this next resistance level at 33.83, somewhere around there. And this is the zones that price went and resell, right? This is sell zones and liquidity. If you see a lot of wick here, you will say these are liquidity zone. Okay, and you pull people from this swing high to the swing low, we have 61.8%, somewhere around there, right? You can see that. So the breaker, okay, boom, right? And price go to where? To this level. That's why you sell, correct? And now move back here. I'm gonna move back here. If we look at market structure based on H4 time frame, right? Price make a higher low, higher high, higher higher low, higher high, higher low, low. Yeah, I will just put here. Okay, higher low, lower low, lower high, lower low, lower high, lower low. If price break above this high, then we will consider this one at our, what is this? Chain of character, right? If price close above this 3344, okay, boom, right? Price close above. Now you have a question just now how to get the entry, right? Whenever price break above here, right, we already get the high, the low and the high here. So you pull from your swing low to the swing high. Where is our entry? My entry would be at this zone, 50 to 78.6%, so below, meaning that this one also another pattern. It might look like the QM or head and shoulder, whatever you want to call it, right? If price come here, I'm gonna buy. And the condition is that price will make a chain of character right here. Okay, I will get back to you later after this. Okay, and here we're gonna buy somewhere around here. Let's see. Boom, right? Price come for the first time, rising, come back up again here, still within the zone and then rising really strongly. And then you can see that boom, right? And now they change market structure, then change of character. And what it is, this is your break of structures. Okay, break of structures. Okay, so since I'm doing gold right now, okay, I have a two buy entry. I'm gonna buy here. I'm wait to buy here for my first support. Okay, because why? If look at market structures, right? They're gonna make a higher high, higher low, maybe higher high, higher low here, continue to go higher and continue like that, right? So and over here, I'm gonna buy, and that is somehow the hidden support right here, or maybe somewhere around here. We have like a demand zone somewhere around here. Okay, around this level. And since I'm already do gold, right, I will just do the trade setup for you guys. Then I'm already here. If I want to buy, if I want to sell, I'm gonna sell here. My first resistance, and that's the reason. Remember, you attend my webinar for the harmonic pattern. I would say this might be my butterfly. So if this is gonna be the butterfly and then ending with a deep point here, I'm gonna sell here, I'm gonna target here. And if this is gonna be the high, this is gonna be somewhere at 61.8% FIB level. Okay, so now you will use Fibonacci from this. You can see that we have 78.6% on top above that, right? And we also have the Fibonacci projection about 161.8. So the zones should be somewhere around, the PRC zone should be somewhere around here since I'm already do for gold. Okay. And what we have another one, we also have the extension, which is 200% extension somewhere around here. So this is gonna be the zone that I'm gonna sell if price rising here or falling to this level. This is gonna be profit taking. Okay, I'll just do the for you guys. Okay, so basically now we need to wait. Okay, this is gonna be like that. Okay, so there's a question: how to avoid stop loss hunter for OB? Stop OB put below the usually for the OB, if you look on the higher time frame, it's very rare that you will get stop out or stop hunt if you trade with the OB. Okay, this one is break above because there was a news. There was a new, and these are non-farm. Is it that was a non-farm or somewhere a news here? So this we can prevent. Usually people will sell here, okay, because somehow we call like the resistance and then you call, but because of this one break, unless if you want to buy, right, or you want to sell here, you need to wait for price. Okay, whenever you see the price rising, okay, what you need to do, you go to the lower time frame to wait for confirmation, meaning that if price go in the zone here, right? If there is no confirmation or rejection, then you shouldn't sell. Okay, we go to M5. Okay, I go to M15 to have a look. Okay, right here. So we're gonna sell here, right, at the first resistance. Boom, you see? Oh, that's too fast. That was a new, definitely that's a new. You can see that rising. Just M15 rejection a little bit. You can see it break above here, meaning break above here. Okay, definitely you're not gonna enter unless if you put a pending order, then you know you will get stop loss. But if you put notifications that our price is approaching or crossing at somewhere this level, and then you see notification, and then you open the computer and then you wait for confirmation on the lower time frame. Look at the M5 as well, right? Price really close above and break above the box, the yellow one. Okay, you can see that. You can see that. So you can see, then we're not gonna buy. Oh, sorry, we're not gonna sell. So from this zone, it's gonna be our breaker box. Whenever you see a breaker box, you need to wait for price to come to the box and then you buy. Okay. Confirmation, if you don't see confirmation, would be those are price action, those kind of reversal pattern, M pattern or W pattern. M pattern at the resistance, W pattern at the support level. Okay, or you can like those divergence, those like pin bar, that kind of reversal pattern, and then you buy or you sell, for example. Okay, yeah, right, chain of character, pull back, it become your breaker box. Okay, you can see that. This one, same, right? We supposed to buy, but this one break. And then pull back, this our breaker box. Okay, break of structure I already show you guys. Okay, we can say that if price make higher high, higher low, change of character and become break of structure. Break of structure, break of structure, take out the low to make a new low, to make a new low, take out the high to make a new high. Okay, if you go like that, you're gonna be to go bullish, right? Whenever they make a new low, change of character and then you changing trend. Okay, you're welcome. Okay, value gap. Okay, so value gap often refers to in the trading and financial analysis that are price area on a chart where the market move quickly through without much trading happen. So basically the gap will happen how many candle? 3 candle. Okay, so basically you want to see the picture here. The first week, so and the third week is not touching, so this is your FVG. Okay, this is your FVG, or your this week and the third week is not touching, so this is your FVG of every gap. Price come in the gap and then you buy, but if not every FVG will work, so you need to find the confluence with maybe other indicators such as the what Fibonacci retracement or other like indicator like RSI. Okay, for example, here this is our FVG, right? Our fabric gap is here. This is my FVG. Okay, yeah. So whenever price go in the first time, you're gonna sell. Let's say you were to sell here, let's say from the wick and then all the way, like let's just almost let's just say 200 pips. Okay, 200 pip. From this high to this low, your FVG, how many percent? 50, right? You can see that your, let's just say either here 50, 50 is here, of here. I'm not talking about here. Usually I will just play when it's come for the first time, right? 50% and then you sell. So you also can set the rule like, okay, if I want to sell or I want to buy, you want to sell, price have to be 50 and above 50, at least 50 to 78.6%, and then you're gonna sell. If buy, if price fall below 50 to 78%, you're gonna buy. So that called premium discount. Okay, you also know about premium discount zone, right? For example here, PND, okay, PND here, meaning that this gonna be my premium. Price have to go say above 50. If price go below below 50 here, I'm not gonna sell, because I'm not gonna sell at a cheaper price. I want to sell whenever price at a premium or expensive, gonna sell. Okay, that's clear. For example here, right? Yeah. Okay, you're gonna buy here. Okay, you can use the premium discount, but actually just use the Fibonacci level. That's it. Okay, now here, for example, here. Oh no, here. Okay, price falling. Okay, at least below 50, you're gonna buy. So your buy zone would be here. Okay, you can see that. Just set the rule for yourself. Okay. I see it. Okay, so basically liquidity, okay, liquidity equal to money. Okay, equal to money. So we have like, for example, we have like higher equal high here. So basically equal high here, we the retail trader, we're gonna sell here, right? You're gonna sell here, then sometimes price boom go up here, you get stop out and then reverse. Okay, so sometimes price might go here or may go up here to make a divergence and then falling sometime. Okay, or sometimes could be a trend line, sometimes trend line like that, because you know you trade in a trend line, you trade in the channel. Okay, you buy sell upper channel, lower channel. Sometimes if you want to get stop out here, then you put the stop loss here, you might get stop out and then price is falling. Or you can be ranging here. Okay, ranging here, price was ranging, and then you trade at the ranging, and then after that you might get stop out. So here a lot of the trader, you put a stop loss here, right? Here also, this is our W pattern, equal low here. Okay, sometimes you may get stop out because a lot of the trader, they will put the stop loss right here. Excuse me. Let me drink water. Okay, so this form of the trend line or those like a chart pattern, which is I have the, let me open my chart. Oh no. Here. Example. I'm going to remove this one. Okay, so you guys have you guys captured this like this sell zone and buy zone here? Okay, so we're gonna sell here, okay, and then we're gonna buy here. If you guys captured already, I want to remove because I want to use the chart. Yes, okay, perfect. I count again, 1 2 3 4 5 6 7 8 9 10. Okay, capture done. Okay, for example, here you captured already, haven't? Somebody click. Okay, I can go back. Okay, here. Okay, captures. Okay, yeah. 1 2 3 4 5 6 7 8 9 10. Okay, done. Okay, so let me show you this. Okay, maybe this one could be the another example, good example, which is, you know, we're gonna sell at this resistance level, correct? Basically, this is our liquidity. Okay, this is a liquidity. Why? Because you're gonna sell here. First time you might sell here. Second time you sell again. Okay, you see the kind of rejection a little bit. Okay, you see that? Okay, a little bit and then it rising. So you will get a stop loss. And then for SMC, okay, this one they will say that chain of character in the lower time frame. Correct? Remember? So they're going to say that okay, this is gonna be their chain of character. Okay, but for retail trader, if you don't know about SMC, you might get stop out, and then after that for SMC, they will wait for price to pull back to where at least you can see that this is the support level, right? At least here to here, right? From this one, price falling, we have 61.8 and then rising. So how many pips? These are example. Let's say almost 200 pips. And for backup again, why price come to this level? Okay, I can tell you there is the demand zone here. Where's my demand zone? Demand zone here. Demand zone here, we go to the lower time frame, you will see what your confirmation, which is your lovely price action. Okay, so this one we sell because they trigger 61.8%. They come back up again. Even though you go to the M15, you will see your, what is this? Your belly of the block. Correct? You can see that. Okay, and then price is rising. And this is our H4, which is, what is this? Liquidity. Okay, and another one, we have another one is here. This one we could say this is your liquidity, right? Because we would say, okay, this is the support level, become the resistance first, then support one more time, and then become the resistance. Okay, so you're gonna sell, you're gonna sell here. So whenever you see that you sell again, okay, you sell here, price kind of like, falling. Okay, so the little trader, they might, jump in and sell again. After that, you get stop out. Okay, why? Because they go to the POI, point of interest. So the point of interest, that will be up here. They might have here. This is my FVG, or fair blue gap. And I would say that will be next resistance level. Okay. And above here, they're gonna have my, I think, 78.6% FIB. You can see that. So this our support, our FVG says 78.6%, and you're gonna sell. Okay. And so here you can stop out, price go to FVG up there. And after that, what do you see? Price is falling. Okay. And now, then we might say in H4, price is already break channel character here. So that's why we're gonna wait to sell at that level. Remember, okay, we go to the lower time frame somewhere around here to look for the entry M15. Now, price has made a market structure shift already. Price go in the zone here, make market structure shift where here. Correct? This is my not market structure shift. That is ICT. Sorry, SMC is the called chain of character. Actually, it's the same meaning, guys. This is a chain of character here, right? You can see that. Okay, and what we need to do, fulfill from the swing high to the swing low, right here. Our sell zone is where? Is here. Our sell zone is here, right? Stop loss above this high. The condition is you want to sell when at the key level, you need to wait for price to make a chain of character first. Okay, because if you don't see like that, okay, even the price at the resistance, high chance they might break. Because in the lower time frame, okay, if in the lower time frame, price still make a kind of like higher, still make the higher high, higher low, meaning they still want to continue to go and then break above this resistance. So you need to wait for price, okay, to maybe here, okay, and the break below, okay, because if they wouldn't break below, then they will continue to make a higher high, higher low, like that. You need to wait for chain of character, this one, pull back, and then you sell. Okay, let's say you sell here. This one we're not gonna trade in M15. Order block is already taken. Okay, so this is not order block I'm looking for. I will go to H1 because this is my H4. So I would aim for this order block also is not work because you can see the order block, the wick already in. What I could see, that would be this bullet order block here. Okay, bullet order block here. Okay, let me see. Boom, right? After my bullet order block bouncing off from this one, it become your either support level or pullback resistance. You can see that, right? Pullback resistance. Close below, you can see the rejection, and pullback continue to go down to where? To this lovely order block. to M1 to H1. You can go to the higher time frame, what happening, and then they would say that this one would be support level. And there is also demand zone somewhere around here. Okay, is this clear? Any question, guys? Okay, that should be all for today. We still have like last session. You're gonna see me anyway. Basically, you're gonna see me like every Monday for education session, unless if I have like something on or I cannot do, and then will ask my colleague or to cover the webinars. Last question. Okay, what's that price break? Why that price break or bullish OB? Market maker. Okay, usually you mean like for example like this one, right? You meaning like for like this one. Usually who can move the market? Big boy, right? And this one should have this one maybe because the news. It's for the news here as well. Or here, right? That's for the news here. Usually, price will respect the bullish order block. Usually, order block they will just respect, right? But in this case, there was new, which is should be is this non-farm of like 1st of August. Okay, you can see that it break, but don't worry. Even though they break, then still the remaining order here. They will come back. Remember, from this order block, it become our breaker block. They will come back, and take the remaining order from here. From here, you see that? This is impulsive move, and it's only big point in the market or those like institutional, they buy, boom. I don't know how million or billion order here can move the market, break out of the block here. And I'm sure here we have a lot of trader got stop up. Okay, and you can see that I show you already, right? Price come to the box, okay, and rising, okay, here, which is here, right? From here, you can see the rejection, meaning that price come to the box, then we have the remaining order here. You can see the fill in the remaining order and rising, okay. Last question before in the webinar, guys. Maybe I do BTC. You want me to do BTC for you guys before I end? I have 2 minutes left. Anyone? I'm quite happy like now how many of you guys joined the webinar? I saw like 12. Let's see how many people. No question. Okay, so let me do BTC before I end. Okay, so the BTC I think it's already they already selling off the BTC because I'll look on a higher time frame. Please do BTC. Okay, now I'm doing BTC for you guys. On a Monday time frame, I told you guys before there's a bearish divergence already. Okay, there's a bearish divergence already. If you want to like, if you are, like, we just have a basic count for yearly wave, right? You might say it's a wave 1, either wave 2, wave 3, or wave 4. You're gonna call it, wave 5, or we just count wave, maybe wave 1, wave 2, maybe wave 3, pull back, wave 4, wave 5, whatever. But I see there's divergence here. Okay, there's a divergence here. I would say that would be, you can see the close below our extension 127, right? You can see that there is a divergence. So whenever you see divergence in the higher time frame, you're gonna hold your sell position. Okay, now we go to the weekly. We're gonna do multi-time frame analysis. Okay, look at the weekly time frame. What happened here? Price closing below extension 127, the body closed below. Last week, the body closed below, meaning that the investor, they're not interested to buy at this level anymore. They want to sell off to make a profit. Okay. Excuse me. We go to the D1. What you see in D1 now? In D1 time frame, you will see that there is a order block here. Now, bearish OB. They're gonna have your bearish OB here, right? Bearish OB here, and price did not go to the bearish OB and then falling. We go to H4 to have a look. Okay, in H4 time frame, you can see that whenever price go, you can see the rejection. In H4, you're gonna sell here. That's your extension. We use the extension whenever price break above the high, right? You can see that close below our extension. So whenever we see H4 like that, you could open the sale here. This is your price action, your confirmation. Price close below your extension 127, you're gonna sell, right? And now on the highest time frame, what do you see? Price break below the low. This is chain of character in H4, but price did not pull back to at least go to this to make either left shoulder, but our tissue here. Go to the lower time frame. What do you see? We might say that price is already make a chain of character. It's where it could be here, right? Lower, higher high, higher low, higher high, lower low. Okay, so this is our chain of character. This is our buy entry, but if you to wait here, price did not trigger. Okay, let's say here, price did not trigger, or I go to M15. Okay, M15, what do you see? M15, I see that there's a belly engulf here. Right, my belly engulfing is here. You can see the price go to the belly engulf and then you sell. Right, you can see that. You can go on a higher time frame to see. You can see price ending with bearish engulfing candle. So this is your bearish OB or bearish order block. Right, price go into the box. You can see that and then you sell. So you get very sell entry, very early entry where from here. And then you hold. Okay, and then price falling all the way. And then they also even break below this neckline. Okay, we go to H4. Like all the way to here. That's how you enter your BTC. Okay. Any question? Okay, now let me highlight the key level. Where am I? Okay. Based on the BTC, I would say this is my support level. Okay. This is the back resistance, which is our monitor, because it's very close to the support level here. And the next resistance level I'm looking for this level, and this is my second resistance level. Okay, so either price pull back here and falling, or pull back here and then falling. So now you need to look for the sell entry. You look at monthly, you will see the divergence. Price should fall at least how many? Level 50. Okay, there's already divergence here. Divergence in monthly is very powerful, guys. At least I can see if Trump not gonna mention anything about BTC, okay? Gonna fall at least here at somewhere around here. 82. Yo, mark out. Okay. All right, guys, that should be all for today. Thank you so much for your time. I hope to see you guys again next week. Same time, guys. Okay, good luck to all of you. Okay. Okay, see you guys again. Bye for now, guys. Take care. Good luck. Bye bye.